Hello, everyone. Welcome to another edition of the Market Minute in the Shady Corner. Like the band The Clash in the 1980s, who posed the question, should I stay or should I go? Today, I'm posing the question, should you buy or should you rent and then invest your capital in the stock market? We will answer that question with facts and with data. In the United States, homeownership has long been the primary way households build wealth, with more families actually owning homes than traditional investments like retirement accounts and stocks. But what if you're torn? What if you're torn between buying a home and renting with dreams of investing in the stock market? Let's explore a fascinating buy versus rent index that will actually shed light on this financial dilemma and help you make an informed decision, which is the only type of decision you should actually make. Let me ask you this. Did you know that home ownership plays a crucial role in a household building long-term wealth? In 2019, the median wealth of homeowners was $255,000. And that is more than 40 times that of renters, whose median wealth stood at just a little bit more than $6,000. As you can see from this graph, this disparity is even more significant for lower income populations, making buying a home one of the most financially consequential decisions a household will ever make. So let's talk about the buy versus rent index. What is it? So the buy versus rent index is a clever tool that models the trade-off between buying a home or renting and investing in stocks. It creates a thrilling horse race between homeowners and home ownership and renters and investing in stock investments, comparing the proceeds from selling a home to the returns that come from a stock portfolio. So why don't we dive into the details? Let's talk a little bit about scenario one, which is a retroactive look. Let's look at the index retroactively, as I said. So you can see here the index is for how the stock market performed in recent years. That's that chart. But when we look at outcomes, here's the comparative analysis of the results as compared to home ownership, this chart. And I will say the results are fairly staggering. In the Austin Round Rock MSA, the index results clearly show that on average, home ownership would have been more financially favorable for all types of buyers. First-time home buyers. For first-time home buyers, it beat renting and investing almost 4 out of 5 times. Move-up buyers. Well, move-up buyers enjoyed this advantage over 9 out of 10 times. And for luxury buyers, it came on top nearly every single instance. Well, that's a rear view look. What if we're looking at buyers purchasing versus renting in 2023, today? Once again, home ownership came out as the winner. For first-time home buyers, it favored home ownership over renting and investing around 3 out of 4 times, 75%. For both move-up buyers and luxury buyers, it was a unanimous win for home ownership. Let me tell you a little bit how this index works. So what it does is it calculates outcomes. And it's a complex calculation that factors in remaining mortgage balance, home value, and sales expenses to determine the sales proceeds. And on the other hand, investment proceeds include the initial investment in home ownership and the annual cash outflows for home ownership compared to rent payments, all adjusted for capital gains tax. Now, what I want you to know is, surprisingly, the index results are independent of the purchase price of the home. Instead, it's influenced by factors like income, mortgage rates, and investment returns. This means that regardless of home prices, homeownership still remains the most financially favorable option. But let's talk and address the current elephant in the room, which is interest rates. Now, I'm not going to lie, interest rates are higher than they've been in a while. Throughout the last half of 2022 and the initial half of 2023, these rates have been on a tumultuous journey, vacillating between the low and the high 6% range. And while we can't expect the historically low rates observed in 2020 and 2021 to return anytime soon, today's rates, when observed through a longer historical lens, are still comparatively moderate. If you look at the last 20 years, you can see that today's rates are still in a reasonable range for those looking to purchase a home. So let me conclude. Homeowners and homeownership proves to be a vital pathway for households to build wealth, especially for low-income families. The Buy versus Rent Index showcases that in the majority of cases, homeownership outperforms renting and investing in stocks. So, if you're looking to build long-term wealth, I want you to consider the many benefits of owning a home. And whether you're a first-time home buyer, a move-up buyer, or dreaming of luxury living, remember that homeownership holds the key to building a brighter financial future. To end, I'd just like to say, if you're looking to buy a home in 10 days or 10 months, give me a call. I'm happy to help. Happy to help you decipher what are the best opportunities for you and your family to build wealth through real estate. I'm David Schneider, broker associate with the Revel Property Group of VXP Realty. My number, 512-638-6585, or visit me at my website, davidschneider.revelpg.com. Thanks so much. Have an amazing day.